I saw you messing with OBS, and I'm like, oh man,
Nah, and if anything,
there's a copyright strike.
yeah, but freaking it lets you know and then you can just clip it out. I did that with one of
Yeah,
my solo streams and we're fine. What's up, Juice? What's up,
gotcha.
Genesis, Richard, Future Whale, Monty Python, OT, Irvin, Unari, Infinex, Sandlot, Big Chop, Arthur, Songliness, Song Lyles. I know I'm Juice. What's up, Juice? Oh, Sirius is back too. Let's go. Hello.
Um,
Yeah,
yeah,
Sirius is back. Juice is back. Let's go, you
I know,
gangsters.
I know.
Yeah,
I'm gonna say this right now as people kind of pour in. If you're here for some Asia TA, that's not what we're going to be doing tonight. Would you kindly please explain the journey for a Spartan? You're really good at like explaining the journey, what it's all about,
yeah.
where you can find more information, how you can get started, and then we'll go from there.
All right, and you know what? I think we talked about it. Me and Thor talked about it. It was brief, but it makes sense. This is a very good time to be looking at what the journey is, what it's about, what the goal is with the journey. All right, and me and him first started it. It was what it's supposed to be, guys. What the journey has was started as was us trying to bring not even beginners, most traders to the table and showing them because let's look honestly, the statistics are clear. 90 something percent of people lose money in trading. All right? And majority of the time they were up before they started losing money. So the journey, what it's trying to do is take a systematic approach to trading, guys. And what that means is having a clear. It's first and foremost, leverage should be thrown out the window. What we're trying to do is build a small account and turn it into an amazing large account, which is going to take a lot of time. All right. So the main goal of this was to compound our accounts, starting with less than $200. And guys, I think that is an important, especially if you're learning how to trade. All right. It's super important to be able to flip money. It's super important to be able to learn when to take trades, when to be okay closing a trade. And really, with the journey, for the most part, it was supposed to be you get into a 1% move, close the trade. Trade's done. Boom. You're up a percent. Now, if you take that same
Without any leverage.
without
Without
any
any leverage. I want to
without any
stress that.
leverage. Yeah, because
It's
with
spot.
leverage, the fees are going to eat you up. You need a little bit more like if you just close like that, you know? Maybe not. Like for 1%. But you're just looking for a 1% move and you're going to gradually compound your account with that. And we have, if you guys go to the journey section, I'll put the link in the chat. We have everything written out of what this is supposed to be. All right. The reason why I think this is so important for newer traders, if you get into trading and you say, all right, I'm in trading, I got into a long, I am closing at 1%. Now you don't have to worry about the FOMO of, is it going to go any higher? Am I going to, do I hold on to it? Do I just take a partial out? Because how many times have you guys asked yourself those questions and then all of a sudden you're round tripping and you end up, which you were up a positive trade, and now you're losing money. So the journey was supposed to be again starting with small capital, gradually building that up on spot. And we've shown you guys to get to a couple $100,000, that's like 400 trades. Taking $100 up to that if you compound correctly. So again, we've kind of strayed away. We've kind of been a second version of a Asian Open or the second half of the Asian Open, and really talking about judging price. But we're just gonna, come in here and friggin' try to help you guys kind of acclimate to what the journey is. I recommend everybody, guys, and I understand we want money now. We want big accounts now. Win Lambo. All right. But you guys need to learn how to trade first and learn how to completely disassociate your emotions from trading. All right. Once you do that, now it doesn't matter if you're trading with $100 or $1 million account. The emotions should still be the same. You should go in like a freaking algorithm, like a robot, and just go ham, you know? But yeah, so guys, I'm gonna post the journey section in the chat. It explains exactly what it is. There's an indicator for it. This indicator is nothing fancy at all. It's a VWAP with this right here. You can see the green and the red. Bring this up. All that is telling you from where price currently is what 1% plus fees would be the average fee. So I think it's like 1.18%, 1.2% move. So when you get into a trade, it's already there for you. You can just, all right, my take profit is here. It makes it a little bit easier. It's nothing fancy. It doesn't help you predict the market. No, it just tells you where 1% is so you don't have to take the ruler. All right. And it's right over here. It'll be in this section. We also have a trading journal. And what the trading journal is, we'll go through that another time. What the trading journal is a journal that shows you what it would be to compound your trades over time. And all you do is input the information, and guys, eventually sometimes you'll get a little better at feeling, where you're at. And sometimes it'll be a 1.3% trade instead of that. But you can see in real time how your money's stacking, and it gives you where you should be at. It's already mapped out from your starting balance to the end what level you should be at. Sometimes you'll overshoot that. Unfortunately, sometimes you'll undershoot that. There are losses. This isn't only wins. But I guarantee, guys, like if you knock out the leverage, you start an account, learn how to turn $100 to $200. All right, learn how to do that. It's the same process you'll take turning $1,000 to 2,000, or 10,000 to 20,000, or 100. So I definitely do like what the journey was. We did have a watch list here. Thor has a couple watch lists that he likes. These were good. I like these coins because for the most part they had good levels and they behaved more predictably. Yes, they're crap coins, but out of all the crap coins, you know, they're the OGs. They've been around. You don't really have to worry about them completely disappearing. You had some really good ones last bull market when we first started this. All of these ran for the most part, even our Bitcoin Cash and all that. But yeah, so yeah, man. I will post this in the chats now. What's up? We got 30. All right. Yeah, man, exactly. And you know what, man? The basics is what wins championships, man. I'm sorry, like I tell this to the athletes that I've coached, I tell this to people. Guys, when you learn how to do the basics, you guys can become robots, and all you're doing is extracting money out of this market. All right, little by little. But the thing is, if you just go in there balls deep with freaking leverage and being emotional, you know what? That's when you get chopped up. That's when you make trades that aren't in your best interest. That's when you overtrade. That's when you round trip. The whole litany of freaking things. All right. So again, we're in the bear market. This is the bear market. I'm sorry. I this is a bear market for Bitcoin. It's cyclical. All right, freaking every 4 years we see it. We're doing what we've done in the past. Yes, this time's different, but Bitcoin's still gonna be doing what Bitcoin does. All right. So this is where it's gonna help you just get those 1% moves, and you'll be surprised how quick your account starts to build up, especially what compounding. Compounding is huge. Compounding is huge, man. So, but yeah, that's my explanation. Now it's your turn, Thor.
Okay. Well, on top of that, the journey was always meant to be for beginner traders going over the basic fundamentals of trading. So if you're in here right now and you're thinking that we're going to be talking about current price action and order blocks and this and this and that and this and VWAPs and all the rest of that, we're not. We're not. I think tonight we're going to focus on volume profiles because a lot of you guys had asked me that during New York Open's live stream. And I said earlier that it would be a good time while things are slow to actually kind of go back to the journey and go over the basic fundamentals. I personally believe that even if you are an experienced trader, it's always good to go back and refresh yourself over the basic fundamentals of trading. Like, it's like anything else, man. You can be really good at something, but it's always good to go back and practice the basic fundamentals, right? So,
Absolutely.
anyhow, with that being said, let's talk about some volume profiles.
Cool. You want me to go?
Well, Spartan's right though. Like, you the journey was only meant to be spot trading. It was only meant to be. Let me get my screen up here. It was only meant to be done with a couple $100. $100, $200, $300 max. That's it. Okay, that's it. And the reason being is because if you can't do it with $200 or $300, you most certainly are not going to be able to do it with $10,000. The only difference is $200 to $300 won't make or break you, while $10,000 might make or break you.
All right.
It's funny. It's kind of like an oxymoron. Um, Trading can be easy money. There's a saying, it's the hardest, easiest money you'll ever make. Sounds funny, but it's also true. And it does take time. So I've seen a lot of people come in here and leave within a week with half of their account missing because they're over trading. They don't know what they're doing. And maybe they don't care, but yeah. So $200-300 max, guys. And it's meant to be played on spot. And when it's on spot, you're only looking for like that 1% move. If it goes the other direction on you, then you'll have to decide to cut the trade. But we have preached in the past that even if you're underwater on a spot trade, you should wait for it to come back up and at least get your 1%. If that takes a whole bunch of time and we dump, like, I suggest that you just close the trade and look for another trade. There's two things that happen there. One, you recognize that your entry was poor and you shouldn't have entered there. And that's going to be a learning process for you so that you get better on entering into the trades that you actually want. So anyhow, let's get rid of this real quick. And I have a lot open. Things are getting sloppy over here. Let's go over volume profiles tonight, since that was like a hot topic. There are numerous ways that you can pull a volume profile. One, let's talk about where you're going to find it. In your indicators section, you can go to
FR.
session volume.
Oh.
Well, you could do fixed range volume profile, or you can talk about an FR VP. But tonight we're going to specifically talk about a fixed range volume profile. You can search that in the indicators. You can find fixed range volume profile. Once you have the fixed range volume profile, you can favorite that. You can put it up in the right hand corner. You can do a whole bunch of things here. You can pull it from, over here on your toolbar, or add it to your favorites so that it's always there. It's a very good tool to have. I won't go without. It's probably my most favorite tool to use in trading, because a volume profile is essentially telling you like where bids and asks are coming in. And if you guys don't understand what bids and asks are, I will put it plainly. It's buys and sells. It's where there's participation in the market within a specific section of price. Okay. And you can take that volume profile and you can pull it over that specific section of price. For instance, currently, this is what we're looking at. This is your volume profile. you have your point of control, and you have your value areas, the value area high, the value area low. The value area is covering 70% of the range, and that would be volume up and volume down. All right. So that's how we're going to do a volume profile over a specific section of price. Before we go any further, let's talk about how you can set up your volume profile. I will go to a higher time frame and excuse me, I will pull, I don't know. I'm trying to make it much larger here for you guys, just so we have, so we can go over the options of a volume profile. I will give you guys my current settings for volume profile. It is up to you to kind of fine tune it to your liking. When you go into the volume profile settings, you're going to have style. You're going to go under your style tab. And then under style tab, you're going to have your value area high, your value area low, and your point of control. There's a couple different things that you can do here. Spartan, you're more than welcome to chime in. You can take off the point of control and the value areas, and you can use a developing point of control, which is this kind of ever shifting as price moves up and down to show where the high volume node is coming in. Now, this is on a very higher time frame, so it's not shifting very much. For the sake of argument, we'll just keep with the point of control and the value areas, and then we're going to go over to inputs. Man, this is crazy. I just wanted to move it over. So for your inputs, there's a row layout. You're going to choose number of rows. I think this is default. More importantly is the row size. This is where people will have a varying degree of what they like. I like 240. I kind of prefer 240. But for instance, if I was to take this down to like, I don't know, I don't even know what the default was set at. If I took it down to 60, you're going to see things become a little bit more blocky here. It's not like there's not a lot of fine grain in there. So it's up to you guys on what you like. All right. Like if you want to point out more of these high volume areas within the profile and you want to use 60, by all means use 60. I mean, it's still showing you
Can you
a
put your
lot of
settings
these
up for a second
areas.
so I can
Yeah,
snip it and
I
put it in
can.
the chat?
Sure. Still showing you a lot of those areas. Let me change this back. But I just wanted to show you guys an example in between 60 and 240. Okay. It's the same profile. It's just taking out a lot of the, like, I don't know, what's the word I'm looking for, Spartan? Like not sensitivity, but,
The
lower the
detail.
number. It's kind of
Detail.
taking out, yeah, the detail. So I prefer 240, guys. So here it is. Here's the settings.
Hold on. Let me snip it.
We have a row size of 240.
All right.
And then we have volume. Under volume, you're going to have up and down. Up and down. You're going to have up and down, and then you're going to have total, and then you're going to have delta. I prefer delta, but here's the thing, guys. Delta is essentially taking within the volume profile, instead of it just being up and down volume, which I suggest for any person who's using an FRVP, excuse me, all this is showing is the up and down volume. It's literally just showing you where the bids and asks are coming in at, the high volume nodes within the profile and the low volume, the LVNs, the low volume nodes within the profile. Okay. It's just more or less like a total. I like Delta, but Delta is kind of getting into some things that are a little bit more, it's a little bit more complicated to understand. It starts to get into more or less order flow. Order flow is kind of what Boyan does with Market Monkey and exo charts and things like that. A volume profile set in Delta is showing you guys where, like, what the delta is, the difference in between buys and sells. So for instance, in this yellow down here at the bottom, there's a lot more people selling into this bottom than there were buys. Okay. And as this pulls up, these guys in here are actually getting trapped. You got shorts down here at the lows, and they're getting trapped. Okay. But it's the difference in between the two. So there's more shorts in here in this section than there are longs. And that's useful information to know because, one, if there's a lot of aggressive shorts here and they're not pushing price down, that means that somebody in here, there's buyers, limit orders, buyers. There's a lot of bids in here that are pushing the price up and then trapping these guys. Okay. I don't want to get too much into the weeds about a delta volume profile over an up and down volume profile. I would prefer to just try and, for tonight, I would say use an up and down volume profile, and then we can talk about delta a little bit later. All right. So let's talk about the ways I think, and in my personal opinion, because you're going to have a varying degree of what people say when they pull a volume profile. And there's different ways that you can do it. Let's start with like a more macro volume profile. Let's say that I wanted to pull a volume profile from the bear market back in 2022 of $15,500, and I wanted to run this all the way up. I wanted to take all of this price from 15,500 all the way up to 127. All right. Here's the thing. Do we need the value areas or the point of control? No, that's not the intended purpose of pulling a volume profile like this. I'll explain. The intended purpose of pulling a volume profile like this is not for the value areas or the point of control. It is to see where volume sits within this pivot low to the pivot high. All right. You can see right here within the volume profile, there's a lot of volume coming in here. There's a lot of participation coming in here. Why is that useful information? Well, if we're going to come down into this zone, we should expect some type of reaction. We shouldn't just drop right through it. That would make a whole lot of sense. Right now, that's currently what we're dealing with because volume picks up in here. All right. The reason why I'm showing you this is because this is a good way of deciding where price might land if we, for instance, dumped from 97. If we're dumping from 97, where might we actually go? Well, again, we're going to look towards volume. Volume is really important. So from a macro aspect, pulling a volume profile like this makes a whole lot of sense because it's giving you an area or a range to look out for. We can see that up in here, we played in here. There's a little bit of volume. Volume kind of spikes like right in here where we rejected from pretty much 97K once we lost it. And Spartan talks about this a lot. Spartan talks about this all the time. Like if this was a high volume node and it ran right through here and price dumped below it, what would you expect to happen if we came back up? You would be looking for a rejection here. And that's exactly what you got right off the high volume node. The volume profile kind of shows you where we had bids and asks, right? It's the same thing as here. It's almost literally the same thing as putting, if we're talking about basic fundamentals, guys, it's almost the same as putting support and resistance lines on your chart. Would a volume profile help with that? Yeah, absolutely. Absolutely, it would. No doubt about it. Down here, we can see that within this overall range, if we were to actually dump below this range, where's the next place that we could be looking at where we saw a lot of participation in the past? I see a little bit down here, right at 52,000. I see a little bit more down here at 43,000. I see some high volume nodes kind of kicking in right around 36, 34, and obviously the overall point of control, where majority of volume actually came in at from this pivot low to the pivot high, was all the way back down around $27,000. That's not to say that we have to come back to $27,000. After all, it's a volume profile. It could happen. It doesn't mean it has to happen. So, again, the volume profile pulled in this way does not need value areas or a point of control. We can see where the point of control, we see where majority of the volume has actually come in from this pivot low to the pivot high. The idea here is when you can pull a volume profile, it's kind of showing you these zones that you should be looking out for if we retrace back to them. So that's one way of pulling a volume profile, and it's a very useful tool. Like, we're dumping from $127,000 and we break daily structure and we're now in a downtrend. We know that we're going to play that trend until that trend ends, right? So if that's the case, we should be looking at a volume profile to determine where the next move might go to. Let's talk about using volume profiles more locally. Let's talk about volume profiles and how they can be useful in everyday trading, more local trading. Let me turn on yeah, we'll go with this. We'll go with the macro range chart. Okay. Now that I turn this on, this has been the chart that I've been trading off of. It's cleaned up a lot, guys. There's a lot of internal structure within here. I'm really trying not to get into structure with this video and using volume profiles, but they go hand in hand. It's like it's a marriage. Understanding market structure and volume profiles is like a marriage, really. They go hand in hand. But I'm trying not to talk about market structure and volume profiles. We'll have to talk about that at another time. I don't want this video to be drowned out and 2 hours long. Okay. So let's talk about a volume profile. Let's talk about how you can use a volume profile locally over a range. All right. I call this isolating your volume profile. It's an isolated volume profile. All right. And we'll go to current price action. Let me turn all of this. Let me just get rid of all of this and we'll go over it from scratch. Man, I don't want to lose this either. So we'll turn this off. We'll turn this off. We'll turn that off. Turn this off.
You could always hold control and then select them all at once and put them in a group, and just turn them all off at once, so you know where they're at.
Okay. Yeah. So we know that we are forming a range here down around $66,000. We know that we put in a pretty significant low around $60,000. And what we're going to do here, guys, we're going to go from the pivot low to the pivot high. All right. And we can see right here that we are forming a range. We've been forming a range for like the past week or so. All right. Using an isolated volume profile is pretty important to understand. I'm not necessarily a fan of like just willy-nilly pulling a volume profile from, like, let's say this pivot high here down to the low. Okay. I'm not. This is not what I call isolated. Okay. And what this is going to do, if you guys don't get this right, is it's going to skew the value areas. Maybe not so much the point of control, but it's going to skew the value areas. What I mean is that the value areas won't be as accurate. Oftentimes. All right. So the way that I like doing this, guys, is I like picking the highest time frame possible that captures the majority of this price action, but you guys know that I typically go from the candle bodies and not the wicks. If you choose, that is up to you. All right. If you want to go and you want to say that, well, this was our pivot low to our pivot high, and you want to pull your volume profile or just consider that being the range, that's fine. That's just not the way that I do it. So what I'll do is I will highlight this and I will capture majority of the price action on the highest time frame possible. What I mean by this, guys, is like if I was to go out to the daily and I did this, let's do it from the daily, from the pivot low to the pivot high here on the daily. I can see that we have a range here on the daily, but once I start shifting down to, let's say, I don't know, the 12-hour time frame, it's apparent that I'm not capturing the entirety of the range. All right. If the daily actually captures majority of the range, then you use the daily time frame. As I kind of shift down, we're seeing like what is potentially, I don't know, like you're talking nearly 2.5% of price action outside of the range. It doesn't, you see what I'm saying here, guys? It doesn't necessarily capture the entirety of the range if you're pulling from the candle bodies. The 6-hour cleans that up. And I could have started on the daily just for reference and then lowered, like gone through the time frames and lowered it and then fine tune this, capture majority of the price action. 4-hour does a pretty good job at this. Let me turn that off. 4-hour does a really good job. Let's see what the 2-hour brings. I would say that the 2-hour time frame is probably the best time frame. Now, why would I say that? Well, one, we can see that we touched the range high to the dollar. We had a deviation and then a back test. We did the same thing in here. We had a deviation and then a back test. The bottom side of this range, we haven't come back down to the bottom side of this range at all. Okay. We haven't come back down to the bottom of this range at all, but we can clearly see that within this developing range, because it is developing, we don't know if this is going to be our pivot high to our pivot low quite yet, but this is what we're stuck with. This is what we have. All right. So it lines up, guys. We can see how price here and here has respected the range high. And this is just my way of doing it. So let's pull a volume profile. We're going to pull an isolated volume profile. And I'm not pulling it from, I could pull it from this pivot low to the pivot high. That would be fine. Oftentimes, you got to pull this back. What I would do is I would include the candle that actually closed within the entirety of the range. All right. I would say that in this instance, it would be okay to pull your volume profile from the pivot low here to your pivot high. But oftentimes we're going to do something like this. Okay. Oftentimes we're going to do something like this. Wondering if we can actually see the value areas change. We're touching here. Let's pull it back. Yes. So you see how that works, guys? Like, I want you guys to see something here when you're pulling an accurate and isolated volume profile. What you should end up with is the value areas making some relative sense here. We can see how we've touched on the value area here. We've had a deviation, but we touched here. It acted as resistance. Here acted as support. Down here on the value area low, we've touched into it a couple times. Okay, it's relatively accurate all the way through. You can see here resistance flipped into support, and even up here towards the value area high, we had a nice rejection here, a nice touch here. Okay, now I'm just going to draw some yellow lines here for reference. Now watch what happens when I take this volume profile and I pull it from the pivot low to the pivot high. The value area low didn't change so much, all right? It definitely pushed up a slight bit, okay? But look at the value area high, how it shifted, okay? So when you're pulling your volume profile, it's important to actually look at those things. The value areas are there for a reason, right? The value areas are there for a reason. Here's another thing, guys. The value areas of a fixed profile are 70% of the price action, okay? It's an average of 70% of the entirety of the volume profile. Here to here is giving you 70%. I always found it important to highlight the range the way that I do, because oftentimes we can look at these value areas for rejections, but there's a lot of times where we just kind of push up through the value area. Now, most people would just use the value area and they go, we're at range high. Well, no, technically speaking, you are not at range high. The value area is not the range high. It is a value area. It's in the name. It doesn't say range high. It says value area high. And this is, I ran into these issues many years ago. People would be like, well, we're at range high because we're at value area high. Well, how do you know if you're going to get a rejection here? And if you do come up, where is it going to reject at? Well, I like this way, because this way tells me this is the range high, this is the value area high, this is the point of control, this is the value area low, this is the range low. Okay, it helps. It helps. So that's the way you want to do it. That's the way I prefer it. And I've just given you a bunch of good reasons as to why. Okay. If you are pulling from the pivot low to the pivot high, your value areas tend to be skewed. They're not as accurate. I would much rather, if I was going to have these value areas in my profile, I would much rather them be relatively accurate than off. Okay. It's just the way that it is. So if you highlight a range in this way, whether you go from the wicks or the candle bodies, in my way of trading, it is important that if you highlight the range, that you take the range and you pull it back to where the first candle closed within the range. That's where you want to pull your volume profile from. You take this candle that closed within the range and you pull your volume profile over. That's going to give you an isolated, pretty accurate volume profile with the value areas not being skewed. Okay. I can't stress that enough. It somewhat annoys me after all these years to see people do it wrong. And then they're like, oh, we're at the value area. Okay, cool. Well, if it's skewed, then the value area could be off by you could be off $100, $200.
Yeah, real bad.
Maybe it's not the value area it's trying to achieve. Maybe it's the range high.
Hmm.
But I can't stress that enough. Like, people still to this day use the value areas as the range low, and it is not. I'm here to tell you that it is not the range low. Okay. What's another way that we could go about using a volume profile? Well, there's numerous ways, but let's say that I wanted to capture, let's say I wanted to capture what was within this range. I wanted the volume profile of this range, but let's say I'm thinking that price is actually going to move up, right? I think it's going to move all the way back up to, like, I don't know. I don't know where it's going. I'm just predicting that we're going up, right? Where's the next place that we're going to be looking for? Well, we know that this is a range. But what if I wanted to figure out what was happening in here so I can actually plan out a trade to the upside? I personally think the best way of doing it is not so much about, like, just pulling a volume profile from, let's say, $79,000 to try and include this from the pivot high, from the pivot high here down to the low. Because again, I'm trying to stay away from market structure, but market structure and volume profiles go hand in hand. But let's say I move up to a higher time frame here. What's a last major pivot point we had here?
I think that.
Well, 98K is a pretty good pivot point, right? Like, that would be, let's go out to the daily time frame. All right, cool. Go out to the higher time frames and we can kind of see that the last major daily pivot was all the way back up here at like 98K before we dumped down to 60. So if I think that we're going up here and I wanted to see, like, what's happening in here, possibly what's happening in here, then I'm going to take my volume profile and I'm going to pull it from the pivot high on the daily to the pivot low. The same way that we did from a macro standpoint of pulling it from 15,000 to 127. Now, again, do we need these value areas? Absolutely not. We don't need the value areas. Maybe we want to get away with just having the point of control, but these are obviously skewed. The value areas are garbage, right? That's not why we're pulling this volume profile this way. So we can go in and we can turn these off if you want, or just ignore them. I don't care what you want to do. But the point is that the value areas, when you pull a volume profile like this, are worthless. They're worthless. All right. Let's go back down to the lower time frames. As you guys will see, as we drop down to these lower time frames, we'll have to adjust the volume profile to the pivot high and the pivot low. So what do we got going on in here? Well, we know we're stuck within this range. We know how to pull an isolated volume profile now. We're kind of anticipating coming up. Where would the next place be that we might be looking at, potentially be looking at? Well, we see that some volume kind of picks up in here, but more importantly, because we're using row 240, if I was to take this row size down to like 20, this would just be one big block, right? So on a row size of 240, we're just going to take this whole chunk. Well, where does that whole chunk, what is that kind of showing us? Well, showing us the last range sits right in here, guys. All right. That's where volume picks up. A volume profile can actually help you determine this. If you're having a hard time figuring out where the range sits because market structure's choppy or you don't have quite the understanding, I don't know, whatever the reason may be, a volume profile can actually really help you pick out these ranges. Okay. So we do know that if we move up and we get a leg up from here, the next place that we might find some type of resistance is coming in here. Let's highlight this. I'm going to go from the candle bodies like I normally do. I'm going to include I'm going to include the candle that closed within my highlighted box here of this range. I'm going to do the same thing here as well. We'll do this as well, so we're not getting lost here. Now we have two zones. Okay, we have two zones here. Now watch what happens when I slide this over. Do you guys see how a volume profile can actually help you accurately predict even highlighting the range? I know you guys are seeing that right now. So let's pull this over. Let's see what happens here. Well, dang, man. How about that? Right? Look how the volume profile helped you accurately predict this range. Not just taking a small chunk of it or half of it, but all of it accurately within the volume profile. What about up in here? Could we do the same thing up in here, guys? Could we highlight this from maybe a 4-hour perspective? We could. It captures majority of the price action, including the wicks. Let's move this over. You see like how just pulling that rectangle over to the volume profile helped you confirm that this is the overall range? Look at the range high, how it falls right into the ledge. Look at the range low, how it falls into this little high volume node, right into this notch before volume dips off, right? Very, very, very useful tool. And I'm showing you guys a few different ways that it should be used. It should be used. Let's move this over. We can we can actually keep this, guys. Like we can keep this as a reference. We can turn off the point of control. We don't really need it. Okay, and now we can keep this. We can go we know that from the daily pivot high down to the lower low, right? That we now have areas of interest in case price comes back up where we could be looking for a rejection. We didn't highlight this one, but I'm done with the examples. I think you guys get my point. All right. Very useful tool. So we can keep this volume profile just like this for a reference. And then what we could do is we could add volume profiles here and we could turn the value areas and the point of control back on. We can do the same thing here. We could do the same thing up here, guys. We're taking from the candle that actually closes within the range. Now, I want you guys to see something like you'll start to understand that the local volume profile is essentially the same thing as this. It really is. This way it can actually help you find the ranges, and then you can go in and you can isolate, but it's literally the same profile. This high volume node is the point of control of the range, right? There's really no deviation here, guys. There's no deviation. Look at the value area. The value area sits right on that high volume node. This value area sits really close to the range high, but it also sits right at the ledge. So once you guys do that, then you can kind of come in here and pick away at things more locally, right? We can kind of pick away at things more locally. Like right now, for instance, we know that this is the entirety of the range that we're playing in. We'll say it's the macro range, but more locally, you can start to dig into what you're looking at. You can zoom in and find entries this way. So for instance, we know we got a little bit of a range going on down here locally, right? Let's highlight this. That's interesting. Came right down to the range low, the local range low, right? Are we accurate in our approach here? Let's pull back. I'd say so. It's covering locally this high volume node. We had buyers and sellers stepping in within this zone. All right. We can move that back. Yeah. Was there something down here? Well, it was locally, it was a range low. Locally, it was a range low. If that's all I know, that locally it was just a range low, then I would start to look at different indicators or something else to determine if this is an area that I wanted to be long at. All right. You know, it's just the way it works. Like, technically speaking, what we could do here more locally, like instead of going from this pivot low to this pivot high, we could essentially just get away with not doing that. We could tighten this up, right? Like, we could do this. Now you're going from your pivot high to your pivot low. Look at that. Does it correlate with your volume profile? Absolutely. Absolutely, guys. You're essentially leaving out what's down here. I mean, it's in this volume profile. And you're essentially leaving this out for the time being, but we also know that this is probably more or less developing. And we don't know if we're going to have any sort of pivot down here quite yet. Something to definitely look at. But more importantly, I would actually say that this is more or less the range that you should be looking at right now, not this. Because we don't know. Like, if we come down here, then we'll know. But right now, you pretty much had a direct hit right off the range low. Pretty much. Pretty much. It's damn close. It's damn close. And again, like the value areas are nice and neat. I mean, if you have a value area and it's supposed to be used as a tool, it would make sense to use it in the right way and not have your value areas skewed. I would say that this is a really good isolated volume profile. I hope that gives you guys some clarity. I don't want this to drag on for like 2 hours tonight. I want it to be pretty concise and kind of to the point. I will see if you guys have any questions. And then after that, we're going to end this journey stream so we have a nice recording for everybody else that wants to watch it without the riffraff or the carrying on. All right, perfect. What's up, Moon Girl?
She's out. She left already.
I always learn something new when you go over this, Thor. Well, I, I sincerely am happy that you guys are learning something. I really am. I mean that. Like, thank you for that. I really do. Otherwise, this is pointless to me, guys. It's not about the money or being an instructor or having a channel or all that stupid crap. I I've stressed the point over and over that you should be in here for a good reason. You should be learning something. I hope you guys take away something.
Yeah.
Huge. I usually miss this because of the timing. Toddler going to bed. All right. Definitely learned a few things. Good. Good. It makes me happy, man. It does. Always learning. All right. Well, then we're on track. We're on track. Okay. Um, I will say this, like, I mean, look at this. We're getting a really nice bounce off of the range low, right? Just using volume profiles and our overall range that we have here. This is a very good example of what I'm talking about, guys. You tapped the value area. Typically, when you tap a value area like that, you've mitigated the zone. You've mitigated the value area. So if this comes back up, you're just going to slide right through. Price needs to find liquidity. All right. But to my point, anybody that called this the range low, you were sadly mistaken. It wasn't the range low. And what do you do when you think that that's the range low? Well, you probably get yourself into a position that you shouldn't be in. I think that's it, Spartan.
Yeah,
I think
that's
that's it.
no, you
See,
nailed it, man. And guys, this is gonna be more slow and steady. We're gonna go over key concepts. I know we do have newer people coming into the Discord, and I think it's good because you get caught up with all these channels. You get caught up with everybody doing like, oh yeah, we're looking for this next move for like 0.4%, 0.3%, and it's just like these scalps. Which if you're new, you're not gonna really understand where you're at. So definitely, guys, I recommend checking out the Journey channel, and we'll have these recorded. I'll post them up, and you guys will have them. And just guys, this isn't fast-paced stuff. Listen, man, the most successful people I've known in trading have been trading for a long time. You know what I mean? They're people that have grinded up to the top. They've eventually gotten to a point where they can be more degenish, if that's how you want to see it. But for the most part, it takes time. And honestly, the one thing I would say the journey gives you that just hopping into trading, you're going to preserve capital. If you only start with $100 or $200, you're going to preserve your capital, man. It's an investment. I understand you guys are paying for the Discord. You want to get that money back every month. But dude, it's an investment to learn how to trade because you never know, guys. Maybe Russia freaking blows up all the servers in the world and then there's no more Discord. You'll still be able to trade based upon what you've learned. But take the time to do it. Take the time and save the money because a lot of people learn their lesson by losing a crap ton of money. Don't be that guy. You know what? If you lose 200 bucks, yeah, it sucks. It burns and
I
I know
will.
it's
Uh,
but yeah. But yeah, guys.
I will repeat what I've said numerous times over the past years. If you guys can't do it with $200 to $300, you guys can't do it with tens of thousands of dollars.
Yep.
What makes more sense to you? Losing a couple $100 or losing tens of thousands of dollars? I don't care if you're filthy rich or not. Like the answer should be because anybody that's filthy rich knows capital preservation. If they don't understand capital preservation, then they don't deserve the tens of thousands of dollars that they have. It'll just be taken away from them. The answer should always be, no matter the amount of money, the answer should always be a couple $100. Do you understand? Like if you, I'm telling you guys now, if you can't do it with a few $100, you can't do it with tens of thousands of dollars. Period. That's it, man. That's all I got for tonight.
No,
Let's
that's
see.
great.
There's will these Journey channel videos be sorted to find all the previous? Yeah, Spartan, can you do me a favor? I know you're recording this. Can you post this in my channel as well? I know it's going to
Yeah.
go into the Journey,
Mhm.
but the Journey thread is it's so freaking hard for people to find, and I'd really appreciate it if you could put it in my channel as well.
Yeah, for sure. For sure, man. Um Yeah, I'll do that. I think it's great, man. Honestly, guys, take your time. Take your time, guys. We got a bear market. This is where you learn. So when stuff starts pumping and there's money to be made and not this crappy price action, you guys will be set. You'll have taken all the lumps that you need to take and you'll continue moving forward, guys. I look forward, guys, take it serious. I look forward to seeing you guys thrive. You know what, man? When everybody's
This is
winning, it's good Discord.
yeah. This is not we are not done with volume profiles. I think the next Journey stream that we do, we're going to correlate market structure into volume profiles.
No. Yep. Yeah, man, it's all important, man. Like and honestly, I like the volume profiles because you can get those cheeky 1% moves off of them. And you know what? You have a clear invalidation, you have a clear entry, you have clear things to look out for. And I definitely think going over this is definitely going to help a lot of us out, you know? So, but yeah, man.
Yeah.
All right. Awesome. Well, I'll get this
All right.
uploaded. It should
That's it
be
for
up.
me.
It should be up in the next 45 minutes to an hour. Hopefully, I can get it done a little bit sooner, but I will get it up as soon as I can. All right. And we're at literally
All
an
right.
hour
See you
on the
guys
dot.
for New York Open.
All right.
Peace.
Peace.